Hello and welcome to my channel Wonders of Price Action. This is the Reserve Bank of Australia's monetary policy on 5th December 2023. Now this is the statement by the governor. At its meeting today, the board decided to leave the cash rate target unchanged at 4.35% and the interest rate paid on exchange settlement balance is unchanged at 4.25%. Okay, it remained same. Last month, the board increased interest rates by 25 basis points, following a period of 4 months where it had held interest rates steady. This decision reflected the board's view that progress in bringing inflation back to the target range of 2 to 3% was looking slower than earlier forecast. This was the reason they have continued increasing the interest rate. While the economy has been experiencing a period of below trend growth, it was stronger than expected over the first half of the year. Underlying inflation was higher than expected at the time of the August forecast, including across a broad range of services. Condition in the labor market had eased but remained tight. It is still tight. Housing prices were continuing to rise across the country, as was the number of new mortgages. Given this, the board judged that the risk of inflation remaining higher for longer had risen, and an increase in interest rate was therefore warranted to be more assured that inflation would return to target in a reasonable time frame. Now, the limited formation, the limited information received on the domestic economy since the November meeting has been broadly in line with expectations. The monthly CPI indicator for October suggested that inflation is continuing to moderate, driven by the goods sector. The inflation update did not, however, provide much more information on services inflation. Overall, mayors of inflation expectations remain consistent with the inflation target. It means they were satisfied. So they did not increase the rates. Overall, mayors of inflation, yes. Wages growth picked up in the September quarter, but this was expected given that it captured the earlier Fair Work Commission decision on award wages. Wages growth is not expected to increase much further and remains consistent with the inflation target, provided productivity growth picks up. Conditions in the labor market also continued to ease gradually, although they remain tight. Still, they have the problem of the labor. High interest rates are working to establish a more sustainable balance between aggregate supply and demand in the economy. The impact of the more recent rate rises, including last month's, will continue to flow through the economy. High inflation is weighing on people's real incomes and household consumption growth is weak. Household consumption growth is weak and is dwelling investment. Holding the cash rate steady at this meeting will allow time to assess the impact of the increase in interest rates on demand, inflation, and the labor market. Three things they are. Returning inflation to target within a reasonable time frame remains the board's priority. High inflation makes lift difficult for everyone and damages the functioning of the economy. This is very problematic for Australians because they have the mortgages issue with the interest rate increase. That really is they can't afford more. It erodes the value of savings, hurts household budgets. This doesn't happen in any country right now. This is happening in Australia. That's very, if you will watch the news. It erodes the value of savings, hurts household budgets. makes it harder for business to plan and invest, and worsens income inequality. And if high inflation were to become entrenched in people's expectations, it would be much more costly to reduce later, involving even higher interest rates and a larger rise in unemployment. To date, medium term inflation expectations have been consistent with the inflation target, and it is important that this remains the case. Okay, they are satisfied with the current interest rate. There are still significant uncertainties around the outlook. While there have been encouraging signs on goods inflation abroad, services price inflation has remained persistent, and the same could occur in Australia. Could occur in Australia, but haven't happened, yes, yeah, up to now. There also remains a high level of uncertainty around the outlook for the Chinese economy and the implications of the conflicts abroad. These conflicts Chinese have also, but Australia and China has these conflicts, especially when the Chinese uh, have banned many imports from Australia. This is a problematic for Australian economy. Domestically, there are uncertainties regarding the lags in the effect of monetary policy and how firms' pricing decisions and wages will respond to the slower growth in the economy at a time when the labor market remains tight. Still, they have the labor problems. Growth is slower, so this is not good for Australian economy. Means this is negative for Australian dollar. The outlook for household consumption also remains uncertain, with many households experiencing a painful squeeze on their finances due to the increase in the interest rate. Their finances are being squeezed in the mortgages, especially. While some are benefiting from rising housing prices, substantial saving buffers, and higher interest rates income. Whether further tightening of the monetary policy is required to ensure the inflation returns to target in a reasonable time frame will depend upon the data and the evolving assessment of risks. They are not clear about increasing the interest rates. They are waiting for the data. While you will watch my video on the Reserve Bank of New Zealand, they will not depend. They are not dependent on data. They have the growth, and also they are their problem of the labor has been solved. Tightening of the labor has ended there, and they are still intending to keep the monetary policy restrictive, while this doesn't look in Australia. So this is a very dovish looking policy. Okay. Returns to target in reasonable time frame will depend on the data and the evolving assessment of risks. In making its decisions, the board will continue to pay close attention to developments in the global economy, trends in domestic demand, and the outlook for inflation and the labor market. The board remains resolute in its determination to return inflation to target and will do what is necessary to achieve that outcome. Board will, but it has limitations. So overall, my conclusion is my analysis of this policy is that Reserve Bank of Australia. So this 5th December policy is dovish for Australian dollar. It means it is expected that Australian dollar will keep falling against other currencies. It also depends on the other currency what their policies are. For example, uh, the Reserve Bank of Australia is hawkish on their currency, so it is a probability that AUD will go down. I have uploaded earlier the AUD NZD analysis for sale. And please like my this video, subscribe my channel, and next time all the banks, so central banks policies will be analyzed here on this channel. Like my this video, subscribe my channel. Bye for now. I'll be coming in the next video with another analysis. Bye.